The S&P 500 and the NASDAQ both closing at records, the 30th, in fact, for the S&P this year. For more on the markets and where she's finding opportunities, at least sector opportunities, let's bring in Ananya Lodaya, portfolio manager for international growth equities at Invesco. One of the things, and it's good to see you on set this morning, one of the things you point out is that you think you got to be selective about where to go in terms of individual names, even though all we've seen are highs across the board. So do you think it's going to narrow in terms of the winners? Since you also point out money's not going to be free anymore. It's going to be a new paradigm, so you need to be more selective. But we've had new highs just across the board, 30 in the S&P.
Yeah, no, thank you for having me on.
Yeah.
The new highs at the index level are driven by sort of a small set of culprits, right? And those are great companies, but we think as the regulatory backdrop eases, as central banks look to cut rates as soon as they get positive data, there's going to be a broadening of the rally. And to your point, you can't just indiscriminately pick everything. The rising tide floating all boats of free money is probably behind us now that capital costs something. But we think there's some wonderful growth themes that are going to power value creation for the next decade. We call it mantra, just mass affluence, new technology, parts of the economy are restructuring and, unfortunately aging. That also throws up a lot of activity.
Do you think there's going to be a pullback in the overall indexes, though, because some of the names that have been so hot pull back and they're such a big part of the index, or you'll just be able to outpace the gains of the rest of the market if you're looking at some selective areas?
It's never a straight line from point A to point B, is it? But some of the things that have been driving the index are based in the fundamentals. And I know there's probably parts of, as you've discussed in your show recently, there are definitely parts of the tech sector specifically that are overheated. But I always think of Amara's law, which says that all innovation is overhyped in the near term, but wildly underestimated in the long term. So I would not bet against tech or against the winners at this point.
It just was struck by central banks are looking for a reason to cut rates. Why? Why do we've tried so hard, central banks, to get away from zero, to get back to more normal, interest rates where money costs something, and you cut down on investments that shouldn't have been made, which causes bubbles and financial crises. So why are they so determined to cut as quickly as they can?
Well, they want to make sure, I think, that they are not the ghost in the machine that's distorting economic activity. And so as soon as they hit...
Now they decide they don't want to do that? How long have they been doing that, distorting economic, for the last 5 years, 10 years, 15 years?
I was going to say 14.
But the ostensible mandate for the Fed has always been to create a backdrop, specifically benign inflation of 2% or, pick a number. But the explicit mandate was to keep a benign backdrop so economic activity can continue. And so they don't want to be too heavy-handed. At some point, the conversation is going to shift to, are they behind the curve if the labor market softens? Every once in a while, when you get soft data points, you do see that chatter pick up. So I think they're mindful of not distorting prices.
Right. They'd much rather keep the punch bowl going. I think even if they shouldn't, they sort of they always err on the side of printing
deficit.
Yeah, printing too much. They do have that. You like Europe better than the U.S., or you just point out that Europe's really looks positive as well?
We think Europe is under-owned, so that is in its favor versus the U.S. The U.S. is a great market, but it's pretty widely owned. And Europe has a bunch of sectors that you don't really get exposure to in the U.S., right? Luxury, the semiconductor supply chain outside of chip design, factory automation. You have some world-class companies in Europe that ought to be part of anyone's portfolio that are in Europe.
This sounds like Graham and Dodd almost. You like high-quality growth businesses, secure positions in the value chain. I want you to explain exactly what you mean there. But also pricing power, self-funded, which means they don't have a lot of debt, I guess, and then clean balance sheets and free cash flow.
Yeah, in short, companies where the big can keep getting bigger because they're doing something very important. They can get pricing power for it, and they, in some ways, create their own weather because they're such a big part of the ecosystem that they control.
So without talking about specific names, you touched on this briefly, I think, but when you say that wealth is spreading around the globe, you're talking about wealth almost into the middle class in certain areas, aren't you? You're not talking about billionaires in terms of affluence. You're just talking about people that finally enter the middle class and are able to be consumers. Yeah,
I think that is the bigger phenomenon for individual companies, just the the sheer number of people in Asia and across the developing world that are coming into consumerism and the behaviors and the economic activities that they will therefore power.
And you also said, I think you said something about people getting older, and I think you said unfortunately, but the alternatives to getting older are really bad, right?
That's true.
Because you're dead. Right? So it's fortunately people
we are all getting older.
Okay. This one makes it.
Yeah, and that's creating,
not that I know these, not that I'm experienced these things, but and so there are what healthcare plays then. Is
yeah,
what you're saying.
Healthcare is essentially moving from infectious diseases, which is what killed you 100 years ago, to now moving to managing chronic conditions, which fortunately, as we all grow older, I suppose, and don't die off immediately, are essentially the next can of worms, right? How do we manage someone who has a chronic condition but is, has a life expectancy that's far exceeding anything we've ever seen before?
Let's hope. We have Gottlieb coming on later to talk about bird flu. Now they're saying it could kill half the world's population. That would solve solve the problem that you talked about with too many people aging. But yeah, he's here. I saw him in studio.
I haven't seen him in a while.
And that was the prediction 20 years ago. It could kill half of the world. And never say never after 2020. I don't think. So would you prefer Europe, or you would just spread some of your assets there? You like the U.S., but also just have some diversification over in Europe?
Don't get me wrong, the U.S. is a great market. Okay. I would never bet against the U.S. market. Europe, though, is overlooked. Valuations are very supportive. And so there's probably going to be juicy opportunities for alpha generation that people should not overlook.